Hello friends, today we are going to decode a question that baffles even the experienced accountants. If you spend money after buying a machine, that is a property, plant and equipment, should you expense it or capitalize it? I'm talking about subsequent costs. That is the cost you incur after the initial recognition of the PPE. Let's break it down with some examples and simple logic. No jargon, just clarity. Hi, my name is Pratheej. Welcome to Deep Dive into IFRS. So what are subsequent costs? Obviously, after you buy an asset, you will continue spending some money on it, maybe to repair it, service it, or just preserve its quality as it is. Now, what to do with this? Should we capitalize this or expense it after P&L? As per IAS 16, the standard says that subsequent costs should only be capitalized if they result in a performance beyond the originally assessed performance of the machine. That is, earlier suppose the machine was able to produce 100 units of the finished product in a month. Now, after this subsequent cost is incurred, if that machine is able to produce 150 units per month, then that is performance beyond its originally assessed performance. In such a case, you can capitalize it. Otherwise, expense it off the P&L account. Now, let's take 4 different situations where subsequent costs are involved and see how they're dealt with. First one, day-to-day repairs or servicing. Things like oil change, repainting, replacement of small parts, labor servicing, etc. They don't increase the performance, capacity or useful life of the property, plant and equipment. They just preserve its condition as it is. So there is no improvement in performance. So obviously, these will be expensed off the P&L. To give you an example, the company owns vehicles and they require periodical service. Say you're spending 50,000 rupees every quarter for its service. Now this actually preserves the condition of the vehicle. It does not result in improvement in performance. So this will be a subsequent cost that will be expensed off to P&L. Situation 2, replacement of major parts or components. Now this can be replacement of the engine of a truck or the roof of a factory. Now these are major costs and they do result in improvement in efficiency or they extend the useful life of the asset. So in this case, obviously these have to be capitalized to the PPE, but the only thing to be noted here is that part, if you take the roof of a factory for example, the existing roof of factory would definitely be having a carrying amount in its balance sheet. So when you are capitalizing the subsequent cost, that is the cost incurred to erect a new roof, the carrying amount of the old roof, that should be written off to the P&L. And the cost of this new roof, this has to be depreciated over its useful life. Next comes major inspection costs. Some type of assets require inspections at regular intervals, without which they will not be allowed to operate. For example, aircraft, ship, heavy duty cranes, etc. So suppose you buy an aircraft or suppose you buy a crane that costs you around 15 crores and it requires a major inspection which costs around 50 lakhs every 5 years. So without this inspection, this crane will not be allowed to be used in construction and other activities. So this has to be capitalized to the cost of the crane and this inspection cost has to be written off over its useful life. Now, what about equipments that don't generate revenue directly? I'm talking about safety equipments and standby equipments. Suppose a plant cannot operate properly without its safety valve. It cannot legally operate without this. Or there is a standby generator or there is a fire suppression system. If you see the main asset cannot operate without these things. In such a case, this has to be capitalized as part of PPE cost. So the next time when your company incurs subsequent costs, just check if that brings in future economic benefits. If it does, capitalize it. If it does not, expense it off to P&L. I hope this video was useful to you guys. Till I see you in my next episode, thank you for your valuable time.